Hi, Judy. Oh,
Hi, Sean.
let me just.
Can you hear me?
Yeah, there we go. Can you hear
All right.
me?
Perfect. Yes, I can.
Okay, excellent.
All right, cool. So now you are live on Facebook. No, on
No.
YouTube, not
Uh,
Facebook.
oh dear, I don't want to be live yet.
The live stream starts a little bit earlier than us.
Does it? Oh
Yeah.
goodness me. Okay.
It's because YouTube it has funny tendencies of not wanting to record. So you have to test it before.
Oh, I see. Okay.
As jy kan Joel, soos ek kan Joel. Hello, Sean.
Hello, Alec. How are you,
Sean?
Alec? I'm well, and you?
I'm remembering a song from my youth.
Which one is that?
Sake vol daga, kana vol wen. Ching ching ching. JS may see en ons ry op die trein. You don't know that one?
I don't know that one. And my brother is a huge fan of Kurt Darren, so I know some of his.
Kurt. I don't know. No, I'm talking about my youth, and that's way before Kurt Darren was popular. How are you, Sean? How are you?
I'm well, Alec. I thought I watched your show from last night, so I thought I'd grace you with a collar.
I'm impressed. Thank you, sir.
Given those discussions.
Well, poor old Stephen didn't realize that he's actually on YouTube. So this show, I don't know, maybe 30 or 40 people already are watching on YouTube.
Goodness.
So I mustn't sing much because I think I'll chase everybody away. Didi.
Oh, wow.
Oh, Didi thinks that's very funny. Yeah? How about you singing a little bit? Come on, Didi. There we go.
No,
You can do a little social media. Get a TikTok clip. What happens when you do sound recording for a business show at BizNews?
I'm too old.
Oh, Didi.
For TikTok.
For TikTok? Serious? Is it like the...
No, but that's the biggest lie. TikTok is so much fun.
No, it's great fun.
It is.
I mean, I love some of those dancing fools.
Exactly.
Mm.
And it's family
I
friendly.
gather TikTok's been banned in India, and it's causing lots of unhappiness.
Oh,
Yeah.
Why?
that's a bit strange. I
Yeah,
wonder they
why?
were
I don't
banned
know. Well,
there.
I think the origin was when India and China were facing off up in the northern regions. You know, they share a border together, and there's a bit of disputed territory. And I think that was one of the actions that the Indian government took, was to ban TikTok, and it's still in place.
Our owner's down. Can they not pick it up off YouTube at FMR? Ask FMR to pick it up off YouTube until our owner goes back. Okay. Sorry, Sean.
No problem at all, Alec.
Mm-hmm.
Who else is on today?
We have Chris Logan, Zach.
Oh, wow.
Zach Callisto was interviewed by Jackie. So
Yeah.
Zach, we got a clip from Zach, and then Chris is going to talk that one through. And then we've got Jean-Pierre Verster, Kevin Lings, and Chris Yelland. So
Right.
Chris is going to talk about those ships off the Cape Coast that he says is a ripoff. Kevin's going to talk about inflation, which is he expects to double not quite double, but to go from 3.3 to 5%. Jean-Pierre Verster will talk about Pick n Pay's results, and Chris will talk about Karoo. Shame, some poor guy got a real pasting this morning on Karoo. Okay.
How's it, Sean? How you doing?
I'm well, thank you, Justin. How are you?
You're winning.
Yeah, I can't complain. Thank you. Thanks for joining.
Good. Oh, no, pleasure. So quite an action-packed show you got lined up tonight.
Yeah, no, it's a good one. We were trying to get the Distill CEO. He's just running a few too many errands today. That would have also been good. And yeah, it's been a bit of a tough day of organizing, but all worked out in the end.
Good. I haven't seen Chris Logan in many, many years, actually.
Yeah, Chris has actually been quite active on the show recently because he's one of the few analysts that cover Cartrack Karoo transaction. How's it, Chris?
And there he is. Hello, Chris.
Yes, how's it? Cool.
It's a long time. I was just saying to Justin, it's been a long time since we last spoke and met up, and but nice to see you again. And I've seen you being pretty active.
Well, not as active as you. You're looking younger than when we last met.
Well, I watched yesterday's show. I was telling Alec, I watched yesterday's show, and there was lots of discussion about collars. So I thought, okay, I better put a collar on. Better get out of my pajamas and put a collar on.
Absolutely.
Hello, Chris.
How's it, Justin?
That was Alec.
Oh, that was me. I'm getting called Justin now. I've been called a lot worse, so that's very good.
Oh, okay.
No comment. That was Dudu there. You got to say goodbye to Dudu now because she's got to work. And then the rest of us, wrong way around.
Chris, I was
Okay.
going to say, Sean's probably looking younger because he's not covering JSC companies anymore.
He's probably making billions on NASDAQ.
I wish. I'm a value investor, Chris. You should know that.
Oh, jeez.
That's why I've got no hair. It's all fallen off.
Did you read Howard Marks's analysis?
Alec, yeah, I did. I've stopped reading him, I'm afraid.
Okay.
I think
He's lost the faith.
he's lost the faith. He's capitulated at the bottom. So I mean, he spent too much time. I spent lockdown with my son. I'm glad my son didn't talk me into buying cryptocurrencies and things like that.
Okay.
But do you guys follow Contrarius?
Yes. Well, from a distance. I mean, I respected competitors.
Because Stephen, I
Don't worry.
mean,
Yeah. Just leave it.
I rate him as a great analyst.
Okay, guys, we got to go now.
Okay.
Stephen, is that Stephen Marks?
Mildenhoff.
Oh, Mildenhall. Okay. All right. We are ready to rock and roll. Thank you very much.
Stand by. Business Power Hour starts in 25 seconds. 15 seconds. 10 seconds.
The BizNews Power Hour.
Welcome to the BizNews Power Hour, where we give you the rational perspective on business news that matters. Well, Sean Pesh is joining us tonight as our guest co-host. He's with Randmore Fund Management. Sean, nice to have you here, given that you are based so far away across oceans. But technology means it's like you right here in the studio, in our virtual studio, indeed.
Well, thank you, Alex. Thanks very much for the invite. Good to be here and to see you all. And to see Chris again from so many years ago.
Chris Logan. Yeah, well, you've just spoilt my thunder or taken away the headline act tonight. Chris Logan. Chris, I know I didn't. I'm going to spring this on you now, but I'm getting good news, good reports coming out of Zimbabwe. Now, if Zimbabwe comes right, and it's still a big if, although the insight we're getting is good, what would that mean for Tongaat Hulett? Put that in the back of your mind. You know Tongaat Hulett terribly well, and we'll be talking about that. But tonight we actually asked you to tell us more about Zach Callisto and some poor person who didn't listen to the show and then lost 12 million rands at the first trade this morning on the JSE.
Yes, sure, Alec. It's actually worse than you set out, because the poor sellers this morning who sold at 59 Rand, not realizing there's a 10-for-1 consolidation, not only did they sell at a tenth of the price that they should have, but they didn't realize that they only had a tenth of the shares that they thought they had.
Ouch.
So, as things presently stand, it means they got to buy, if they sold 10,000 shares at 59 Rand, they've got to go and buy 9,000 shares back at 500 Rand now. So it really is a bit of a calamity.
Wow. Well, we'll hear more from Zach Callisto. Jackie had a lengthy interview with him today. That's up already on BizNews Radio. If you want to listen to the interview at some point in time, it's really interesting. He is what the Portuguese community call a Coca-Cola. Do you know what a Coca-Cola is? No?
No.
Someone who comes from Mozambique. The Portuguese community, according to my neighbor, Manny de Canya, is very stratosphere, and the people who come from Portugal, they called something. The people who come from Madeira, which is where Manny comes from, are called something. And then the people who come from Mozambique are called Coca-Colas. And I think it's because they drink their alcohol, wine and Coca-Cola, because apparently the wine that they have from Mozambique is so bad, you have to put it together with Coca-Cola and call it Catembas. That's Manny's story, and I'm just passing it on for what it's worth. Also tonight, we're going to be speaking with Jean-Pierre Verster. He knows all about making money from stock market short selling. He, remember, was the man who very famously made 100 million rand by selling African Bank before the collapse. Kevin Lings, the chief economist at StanLib, we're talking inflation with us. Kevin's one of the few economists I know who actually make these highly unintelligible and very complex numbers, the big economy issues, understandable to us lesser mortals. And then we'll also be talking with Chris Yelland. He's got a beef with the new power ships that are going to be parked off your side of the world, Chris, off the Cape Coast. I'm not sure if you've been following that, but it looks like we're going to be doing another BHP Billiton Hillside deal. Do you remember that, where Eskom signed a deal with BHP Billiton to provide power to their aluminium smelters? And it looked good to begin with, but eventually it became an absolute disaster because of the changes in the marketplace over a number of years.
Yes, I track Eskom. I did an analysis of it about 10 years ago when it started going fraught, and I've kept in touch, and it's just one debacle to the next.
Yeah, some people are saying, well, Eskom has only been badly managed recently during the Zuma era. I'm afraid it started a long time before that. The poor management did. The plundering, of course, only began when the Guptas got their fingers into the Eskom pie. But we'll be talking about all of that in a moment. First up, let's hear from our editor-at-large, Jackie Cameron, with today's news flash briefing.
South Africa's headline consumer price inflation has not risen as quickly as analysts have forecast. It rose to 3.2% year-on-year in March from 2.9% in February. That's according to data from Statistics South Africa. Core inflation, which excludes prices of food, non-alcoholic beverages, fuel, and energy, was at 2.5% year-on-year in March from 2.6% previously. South Africa is home to over twice as many millionaires as any other African country. Despite this, the total private wealth held in the country declined by 25% between 2010 and 2020. This is according to the Africa Wealth Report 2021, published this week by Johannesburg-based wealth intelligence firm New World Wealth, together with Mauritius-based AfrAsia Bank. The report notes that Mauritius is the wealthiest country in Africa in terms of average wealth per person. The World Bank officially classified Mauritius as a high-income country in July 2020, says the report's author Andrew Amoyles. He says that total wealth held in Africa has fallen by 16% over the past decade when measured in US dollar terms. Africa's performance has been constrained by poor performance in the three largest African markets, South Africa, Egypt, and Nigeria. But Amoyles says that total private wealth held in Africa is expected to rise by 30% over the next 10 years. This growth will be driven by strong growth in the billionaire and centimillionaire segments, especially in fast-growing economies such as Ethiopia, Mauritius, Rwanda, Kenya, and Uganda, says the report. The South African government decision to include 3 liquid and natural gas power ships from Car Powership SA for emergency power is a mistake which will cost South Africa dearly in the long run. This is the view of energy expert Chris Yelland. He says that all the liquid gas will need to be imported, which carries a lot of financial risk for the country. The fuel cost is linked to the US dollar price for liquefied natural gas, which means that the US dollar-rand exchange rate can significantly influence the future cost. He adds that South Africa will never own the power ships. Zimbabwe plans to sell the right to shoot as many as 500 elephants for as much as $70,000 or 1 million rand per animal. This is to help fund the upkeep of its national parks, it says. The hunting season, which takes place over the Southern Hemisphere winter, will resume this year after the coronavirus pandemic scuppered plans to have elephants shot by foreign tourists in 2020. Bloomberg notes that Zimbabwe has the world's second biggest elephant population, and neighboring Botswana has the largest. Both have been criticized by environmental groups for their plans to profit from elephant hunting. Botswana is resuming hunting after a 5-year ban. Zambia and Namibia also have substantial elephant populations. And that was your BizNews Flash Briefing. I'm Jackie Cameron for BizNews. You can find more on those and the other main stories of the day at biznewsradio.com.
BrightRock believes that with every change in life comes opportunity, and the markets aren't any different. The daily movements in the markets mean change for us all, sometimes small, sometimes big. This daily market report is made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes. Justin Rowe-Roberts has been watching the markets.
The JSE All Share Index was slightly in the green at 67,100. The highlights included Sasol up 8 Rand to 233 Rand a share on the back of stronger oil prices. Implats surged 5% higher to 293 Rand as precious metals producers were up across the board. Naspers and Prosus were both down on the day to 3,400 and 1,560 Rand a share respectively, as Tencent fell 2.2% in Hong Kong this morning. In the US, earnings season is well underway, with Netflix reporting after the bell yesterday. The share is down over 7% after the company predicts its worst quarter for streaming growth in its history, with the reopening trade continuing to gather momentum. In the currency markets, the rand was flat against all the major currencies to 14 Rand 23 cents to the dollar, 19 Rand 83 cents to the sterling, and 17 Rand 12 cents to the euro. Gold is up at $1,791 an ounce. Brent crude is trading at $66 a barrel, and the premier cryptocurrency will put you back a shade under 800K Bitcoin.
And this market report was made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes. You're listening to the BizNews Power Hour, brought to you by the team at biznews.com. Well, Sean Pesh, I've been dying to ask you this question in public. We've seen your negativity about Naspers for a while, and I think last time we spoke, you said it was priced for perfection. Well, the perfection of Tencent is no longer there. The Chinese authorities are having a full go at that company, and Naspers' share price has really been under the cosh in the most recent times, despite a very heavy share buyback scheme. Remember, they got $5 billion that they're allocating to buy back their own shares, which ordinarily would push the share price up. So I guess, are you feeling a little justified at this point?
Well, Alec, I mean, it's, to be honest, we don't own Naspers or Tencent. So, my big concern has been for the South African savings industry, because it is such a large percentage in that. And I was interested to listen to your show, or watched your show last night, and listening to Pete Mouton talking about the complexities and the tax changes in the unbundling. And I think, unfortunately, Naspers have painted themselves into a corner by saying, well, we're not going to sell these 10-cent shares for one process for the next 3 years. And now this unbundling takes that angle away from it. It's a very costly alternative. So what are they going to do? And I think the risk is, the risk is you can't take on a superpower. We've seen that with Russia. Okay, when UCOS got on the wrong side of Russia, it ended up with bankrupt, stripped, and all the other Russian stocks ended up at 5 times earnings. And if you look at the Asian Pacific Index versus the world index, it's been underperforming this year. And I think largely because of people are concerned as to what China is going to do to these companies. I think I'm right in saying that people have seen Jack Ma for 48 seconds since October. There was that one clip, and that's it. So, this is what you're dealing with. And I'm very concerned that they're just not taking the profits. They've painted themselves into a corner, and who knows where Tencent is going to go, to be honest. I mean, who knows? It's no longer, I would take issue with the fact that it was a fantastic business, okay, with the gaming and all the rest. But these days, it's largely a venture capital company. I mean, they've got hundreds of stakes, tiny stakes in little Chinese businesses, many of which actually transact with Tencent, which makes it very complicated from an analysis perspective. And so actually, I would go as far as to say it's unanalyzable. Okay, I'm not uninvestable, but it's unanalyzable, because if you look at their balance sheets, such a large percentage of the equity now is tied up in other assets, which is stakes in MySun and JD.com and hundreds of these little things, all of which, well, many of which, certainly the listed ones, they all transact with Tencent, but because they have a minority interest in them, the income and expense don't net each other out. So this is going to get a little bit complicated. But if I own 100% of another company and I transact with that company, it's my income is an expense in that company, and one consolidation nets out. If I have a minority stake in another business and that company buys services from me, it's income for me and an expense for them. But because I don't net them out on consolidation, okay, it's a factor. And so that's what's been going on. So I think it's very difficult to analyze that company. And I think now you've got a political risk. I mean, who knows?
Sean, in other words, you would not be holding, you certainly wouldn't be buying Naspers, but what if you held it already and you had a significant tax problem if you were to sell the shares now? Would you take it on the chin and get out?
Look, I think, to be honest, I think the worst decisions you could ever make is to not sell something because of tax. And if you look at, South Africa, I mean, if we went into business together, Alec, and I could take whatever I wanted as a share of our profits, you and me, okay? And I said, I'll tell you what, Alec, you take 82% and I'll only take 18. I mean, that's an amazing deal. And so actually when people say, well, they don't want to sell it because of tax, and I look at it and I go, capital gains tax is, I think, a maximum of 18% in South Africa. That means you get to keep 82% of the gains. And so you don't want to sell it because of the 18% you're going to sell. I think it's crazy. So,
Sean Pesh, and we'll be talking more with Sean as the program goes through. He is our guest co-host tonight. But let's pick up now on a South African entrepreneur who's been closely followed by our other guest who's in the virtual studio, Chris Logan. This is a fellow called Jack Callisto. He's the chief executive of a business that used to be known as Cartrack, is now known as Karoo. Jackie Cameron, our editor-at-large, has done a lengthy interview with him, which you'll find on biznewsradio.com. But we pulled this little clip out for you to just give you a taste and then to give Chris something to talk about.
Well, first of all, I am South African and I love the Karoo. So when I externalized my shares in approximately 2 years ago, I formed a company in Singapore called Karoo to hold my shares. When I was then looking at all this corporate action that we did, and after that, we applied with all the relevant authorities. The only way we could have done this transaction is through me doing a buyback of the minority shareholders. At that point in time, it was very important to get Karoo.com. And the owner of Karoo.com just wouldn't give it to me at a reasonable price. He was asking for $1 million. It's someone in America. At that point in time, we said, okay, does it really make a difference whether it's got Karoo with 3 zeros, 4 zeros, 5 zeros? It's just a name. And we didn't want to do a name change. And so we went Karoo with 5 zeros and registered Karoo with 3 zeros to 9zeros.com. So all those domains belong to us, which allows people to get our name wrong and still come to still land up at the right website.
Do you find yourself thinking about your business all the time? Are you obsessed with it?
Well, I think fundamentally everybody's obsessed with something or another. And, people talk about a balanced life. I certainly believe I have got a balanced life. I work, I enjoy family, I enjoy friends, I enjoy life. And I could be working at 2 o'clock in the morning, 3 o'clock in the morning, but I could also be having, a lunch at 10 o'clock in the morning. So for me, you just live, and I wasn't designed to, at 5 o'clock, you knock off, and at 8 o'clock, you get to work. So some days I'll get to work at 7 in the morning. Other days I might get to work at 11 in the morning. So, I just live and I enjoy every aspect of life. And work is obviously a big driver, and I live to improve the business.
You mentioned you get rid of deadwood. Would you describe yourself as a ruthless employer?
You know, the word ruthless, it depends on how one describes ruthless. So when I say we, you know, Deadwood, when we find somebody doesn't fit our culture or is not interested in the business, then we, you know, there's clearly a better company suited for them to go work at, if that makes sense. But clearly we're very compassionate. We have a lot of compassion for our staff. We're very understanding. We drive a tremendous amount of compassion, understanding of our staff, but we certainly don't allow people to come work for us and play politics all day long and be distractive and create little groups. And we don't tolerate that type of thing. And it's, you know, that's what I call Deadwood, where you start having people in businesses, paper shuffling and hiding behind their screens, their computer, playing computer games every day. And, you know, there's a lot of the companies that have that type of thing. So we don't really entertain that type of behavior. And now, having said that, I certainly don't believe that makes us ruthless in any way.
How do you actually hire people? Do you have specific, unique ways of doing that?
You know, recruiting is a very difficult and very challenging way of, you know, to grow a business. It's not. We certainly don't believe that we've got it right. We certainly have great teams, but it takes, you know, we're getting better at it. But we focus on, you know, 2 or 3 people, you know, doing the interviews. We've put a lot of focus on training, and it's difficult to get good people. You know, it doesn't matter whether you're in South Africa, whether you're in Asia, whether you're in Europe. But we've built a great team. We're over 3,000 employees at this point in time. I don't believe you can grow a business with 3,000 employees if you're not compassionate and understanding of everybody's needs, and you've got to remain extremely human when dealing with people, if that makes any sense. So, but you know, and without the people, you're not going to have a business. So remaining human is key.
There's a whole lot more where that came from. Go into businessradio.com. Chris, you're a big fan of Zach Callisto's.
Yes, absolutely. I've had the good fortune to get to know Zach reasonably well as an analyst. And he's a true entrepreneur. And by that, I mean, you can send him an email and it turns, you know, it's whatever time in South Africa and it's 2:00 in Singapore. And surprise, surprise, 2 minutes later, you get a reply. He's one of those rare hands-on guys. You know, it's like dealing with a Viv Immerman from the old days. And he is pretty unique in his skill set. You know, he's very softly spoken. He's not an aggressive A-type personality, but he's on top of everything. And if he doesn't know something, he'll tell you, and then he'll come back to you once he's found it out. I really think he's an outstanding entrepreneur and business builder.
Sounds a bit like he is the epitome of Collins's books on Good to Great and Built to Last. Remember where he went back and he got a group of students, Jim Collins, and they analyzed the best performing companies over a number of decades. And they came up with the ideal CEO. And that person was not A-type personality. In fact, it was somebody who we didn't even have never really heard of. It was someone who was below the radar, who understood the detail, who was hands-on, who was enthralled by the business that they were working in. And from what you've told us now, if Jim Collins were to have a look at Zach Callisto, he would probably say, yeah, this guy qualifies. I'm not sure that he's performed as well as those companies had, but it is counterintuitive. You would almost think that the best performing CEOs would be those that we always see on the front covers of magazines, or no longer magazines, but on the ones who've got the big PR machines who push them forward. Zach, we'd never heard of him until he decided to do this transaction on NASDAQ.
Sure. He is atypical. You know, he cooks lunch for his staff. You know, I haven't heard of that before. Certainly not something I do.
Justin's looking at me and saying, "Hey, what's your better than Russian and chips?" Eh?
We are lucky if Alex's wife Jeanette brings lunch, but that's as far as it goes. Alex certainly not doing any cooking himself.
And what's very interesting, Alec, he's got 3 of his children are in the business now, and I've tracked through. I mean, they all done exceptionally well. His daughter's now chief marketing and chief revenue officer, and I've gone and looked on her LinkedIn profile and learned an incredible amount just by doing that. It's quite a unique combination. But the one thing that does stand out, as I said, I see JP's there. I see a lot of similarities between Cartrack and Capitec. In terms of the growth rates, in terms of that focus on the customer and the low cost model. You know, Justin pointed out that Zach probably only paid himself 3.8 million last year because he's got 67% of the shares, which is true. But I responded by saying his CFO, who has no shares, is similarly underpaid compared to his counterpart at Mix. That low cost culture is a huge enabler in a variety of ways. And, you know, perhaps JP could come in here, but if you low cost, it opens up a world of greater opportunities. You know, that's certainly been my experience with a Capitec and a Cartrack.
You've referred to Jean-Pierre Verster, who is joining us now to talk about Pick n Pay. But before we do that, Jean-Pierre, the point that Chris made about Capitec, you're very involved. Are you on the board at Capitec still?
Yes, Alex. So I used to look at Capitec from the outside. And since 2015, I get a bit more insights from the inside as chairman of the audit committee and a board member, correct?
That's extraordinary, actually, from being a critic, I guess, because you were looking in to somebody who's now in the beast itself. Is Chris reading it correctly? Because clearly from your both positions that you've been in with Capitec, you would be able to say whether he's actually got the right story there.
Sure. I do agree that there's a lot of similarities in terms of the growth and the cost conscious culture. I do believe at this point in Cartrack's life cycle, it's maybe a little bit more reliant on Zach Callisto as a person. I've met him a few times, and I think he drives that business very hard as an individual, and his personal culture has fed into the culture of the business, which is maybe slightly different to Capitec, which was less about any one individual. But yes, the growth and the cost-conscious culture and the focus on doing the best for the customer is something that a lot of companies have used very successfully to grow not only their own profits, but also grow value for their clients as well.
That customer obsession is, if you just follow the Amazon story, you've got to apply it in your own business, because you can see what it's done for Jeff Bezos and how that business has just mushroomed. I don't know what Cartrack's like, but I do know that Capitec customers love the bank. Now, that's unusual to have people who love their bank, but Capitec customers, they really do. I'm not sure, Chris, maybe Cartrack customers love Cartrack as well, but it is a wonderful position to be in when your customers realize that you are really there to serve them. And many people have this lip service, but very few actually achieve it.
Yeah, I've certainly gained that impression, and it's in all his literature. You know, if you look at that wonderful founder's letter of Zach's, the first thing is customer first. And, you know, you've got to think, how did someone who fled the Mozambique revolution build up what he's built with very little backing? He obviously, and I think he does have that EI where you can connect with people and customers, but you don't go and eclipse long-standing competitors like Netstar and Mix unless you get it right with your customers, particularly when you've got very little capital, you know. So, yeah.
Sean Pesh, do you have other examples apart from Amazon? I hope you're an Amazon fan, given the way I've been gushing about Jeff Bezos, of a similar kind of a situation where customer focus has delivered excellent returns for shareholders?
Alec, I mean, it's interesting listening to, I don't know Zach, but what a fascinating story. I mean, escaping Mozambique and building up this business and listing internationally. It's wonderful, and all credit to him. I mean, look, I read a lot of conference call transcripts, and I was reading the Netflix one last night, this morning, and they talk about Reed Hastings. I think is an incredible person. What a remarkable business person. Because if you recall, Netflix originally was you posted the DVDs back, so they just eclipsed Blockbuster and said, okay, well, we're not going to, the difference between us and Blockbuster is we're not going to charge you the fines for bringing back your videos late, which irritated everybody. You watch a great movie and then you forget about taking it back to the video store, and the next thing you got the huge fine. And that was the angle. So you can see that, and then they made such a huge success, having pivoted their business in terms of the internet and streaming model. But his thing is keep the main thing the main thing. And the main thing wasn't posting videos back. The main thing was entertaining the customer. And so, so I guess that's probably quite a good example.
I'll give you a tip in South Africa of a company who's recently started, who's doing the same thing, and that's Gideon Novik's new airline Lyft. What they've done, they abolished cancellation fees. And it's the most ridiculous thing. You could have a death in the family or something that is completely beyond your control. But airlines say, tough luck, pay up. Whereas Lyft says, we don't ever charge cancellation fees. But that's a story for another day. Jean-Pierre, just to get back to the other similarity here, Chris was telling us that in Karoo, there are a number of Zach Callisto's family members. Now, if you think about the most successful family business in South Africa over many decades, it has to be Raymond Ackerman's business, or Pick n Pay. They came out with financial results today. They've got a new chief executive coming in. The CEO that they brought in from abroad did very well. So they've repeated the story, bringing in another CEO from abroad. What's your reading of the way that Pick n Pay is going? If Raymond Ackerman does get to 100, is he going to look back on the next 10 years and say, well, we made another good call by bringing in the new CEO?
Yes, and if we look back to the last 10 years between Raymond Ackerman's ages of 80 and 90, I think Richard Brasher has done a very good job. If we take ourselves back to when he joined roughly 8 years ago, Pick n Pay had a lot of balls in the air. They were doing a lot of things at the same time. They just launched the Smart Shopper program. They were sorting out their franchisees. They were moving towards central distribution. They were expanding into Nigeria. They launched a new own label. And it was actually too much at the same time. Richard Brasher came in and sort of over 8 years, slowly but surely and systematically addressed all these issues, sorted them out, fixed the business, I think one can say, and is ended and bowed out on a high. This is a very good result from Pick n Pay. The headline earnings per share are down more than 20% on a reported basis and down 16% on a comparable basis and down 6% on an adjusted basis. There's a lot of adjustments. The last adjustment is for hyperinflation in Zimbabwe and to the effect of visas. So there's a few numbers to look at. And normally if your profits are down, let's pick one of these, -6%, the most flattering one. You wouldn't say it's a strong result. But this is a strong result in the context of COVID and the significant negative impact on the sales of tobacco and alcohol. So a very good result. And if we look 10 years forward, Mr. Boer coming in, as you say, another foreigner, if he can take this one step further and take the baton from Richard Brasher, I think there's a good chance that on this very strong platform and foundation, he can build for the next decade in Pick n Pay style.
Do you know much about the new CEO?
No, in the presentation, he did introduce himself. He went through his background, so he clearly has got a lot of experience in retail and in emerging market retail as well. So one can probably describe him as a safe pair of hands, and he's not coming in to fix a business, as was the case with Richard Brasher. So I think the market will probably look at his appointment positively. It seems like that has been the case up until now. So a lot of foreign investors or foreign CEOs have come into the South African retail space in particular. If you think about Massmart with Mitch Slape, for instance, you think about Ian Moore, who was at Woolies and only recently bowed out. So it's been very interesting to see how many foreign CEOs we have specifically in the retail space. And they haven't always worked, but Pick n Pay at least has had a good foreign CEO pick before, and hopefully the second one will be as well.
And it's quite in the news at the moment, given that Daniel Mamnele of ABSA only lasted 16 months after a whole year of them having to wait for him. So I guess we need to be mindful that the chemistry is not always the same. However, the way you've described it being a safe pair of hands, it sounds like he'll just continue with, or would be happy to continue with the work that Richard Brash has already done.
That's my expectation as well. And I think the one thing about retail is it's a relatively simple business. You know, you buy stuff and you sell it for a better price, and you just make sure you cover your costs. And I'm oversimplifying it, I'm sure. But given that, it means that we have seen executives going to different countries and apply good retail principles and being successful CEOs, maybe more so than a lot of other industries. So I do expect that he'll do well, and we'll need to wait and see if he makes any major changes. Once again, if I look at another CEO, when Peter Engelbrecht came in and took over from Whitey Basson, it took him, call it 2 years to really look into the business, even though he had been in the ShopRite business for a number of years. And then he said, we're going to exit a bunch of African countries that we've been in for 10 years. So I think a CEO always has that prerogative to make big changes. They should just hopefully do so and take the whole executive team with them for that to be successful.
Jean-Pierre, we're hearing both local and offshore fund managers concerned about where valuations are pretty much across the board, and fund managers wanting to own the best companies in those respective sectors. The food retail sector on the JSE obviously contains a few big hitters. Who's your pick there?
So in broad terms, we see some value in the South African retail sector. It's not, I would say, as attractive as a lot of other sectors. And I'm sure you've spoken about the specific value in the small cap space across a number of industries that we've seen in the last 6 months. Currently in the South African retail sector, our preference is Woolies, Woolworths. They have been the best performing retail share or food retail share the last year, but the worst one the last 5 years, and mostly because of David Jones. So now that they've sort of sorted out the Australian balance sheet and decoupled Country Road from David Jones, that is our preference. And it's probably, if it was only the Woolies food business listed on its own, it would probably be the best performing food business listed on the JSE. That is a wonderful business. So now that they've sorted out the rest of the business, and maybe the clothing business needs a bit more work, that is our pick in the retail sector. Secondly, would probably be Spar. That is probably the steadiest of the food retailers. Slightly different model, more the guild model, which is close to being a franchise operator. So it makes the business model slightly more stable. And then only the likes of Pick n Pay and ShopRite.
Jean-Pierre, you mentioned briefly, and I'm going to bring Chris Logan in now, the hyperinflation in Zimbabwe. Now, my understanding is inflation in Zimbabwe is very much under control. It's about 2% a month now. So it's almost like it was a basket case and we stopped watching the basket, but the basket does appear to be replaced by something a whole lot more positive. So I'd love to get your thoughts on what it means for Pick n Pay. Obviously, Zimbabwe is very small relative in Pick n Pay's life. But Chris, you were one of the arch critics of Tongaat Hulett, and Tongaat Hulett invested massively in Zimbabwe. If Zimbabwe comes right, would that not be a reason to be buying the Tongaat Hulett shares, which are still got upside in them in the normal course of affairs with the turnaround that's happening there?
Without doubt, Alec. You know, and I'm very impressed, as you know, by the new Tongaat management. So, look, it would be huge if Zimbabwe came right, but, you know, proof of the pudding there's in the eating. These these countries tend to consistently let one down. So I hope you're right about these green shoots.
Okay, but it's an optionality then. So let's just say,
With-
if you want a nice, where else do you get an option on a Zimbabwe turnaround? As big an
Yeah,
option.
I mean, I'd be prepared to buy Tongaat now, not based on the view that Zimbabwe is going to come right. Just with the work that's being done.
So it's almost like you've got the base already.
Yes.
You will see an
Yes.
improvement from there. But if Zimbabwe comes right, that'll be a massive swing factor. Jean-Pierre, do you know much about the Tongaat assets in Zimbabwe?
I'm not very close to it, but I know they've got extensive sugar operations in Zimbabwe. And coming back to the Pick and Pay issue of Zimbabwe, as you say, on the margin, the delta from the previous year to this year was a big impact from Zimbabwe, even though it's a small number in absolute terms. So going forward, I think for Pick and Pay, it will be more Zambia than Zimbabwe to drive the profitability of the rest of Africa. But Alec, for interest, the one person who hasn't taken part in this conversation is Sean. And I do believe he was born in Zimbabwe. So I'm keen to hear what Sean has to think about that.
You are quite right, JP.
Inside track, Mr. Pesh.
Well, unfortunately, we left when I was 5 years old. And I was last back there many, many years ago. But yeah, no, so
But you always look for opportunities. You're a deep value investor. And if there's any deeper value than Zimbabwe right now, you're going to have to really scratch to find it.
Well, yeah, look, I think that's right. But I also think, you've got risk, deep value and risk management. And part of that is liquidity. And the liquidity in Zimbabwe is next to nothing. And so, I think I'm right in saying a few years ago, the entire banking system in the whole of Zimbabwe was worth $100 million. I mean, I don't know what the number is now. But I mean, if you buy a share and you get it wrong, and remember, even if you're really good, you'll get 6, 7 out of 10 right. So if you get 4 wrong and you can't do anything and you lose everything, that's a problem. So liquidity for me is a big issue.
I'm just throwing something else at you. The very best platinum mine in the world on management, on grades, on the performance is Zimplats in Zimbabwe. It is run entirely by Zimbabweans and it has worked against impossible odds. I know that because when you have a look at the Impala Platinum annual report, you'll get the glowing reports about Zimplats. And then when you talk to mining people, they will tell you it's a wonder that this company has done as well as it has. So it shows you that given the right circumstances, the Zimbabweans can be excellent business people and excellent managers. If that can be translated in Tongaat Hewlett's regard, in an economy that's no longer destructive, but maybe just neutral, let alone supportive, surely you've got wonderful optionality that you could be looking at.
Well, Alec, absolutely. And I don't know Tongaat Hewlett at all. I mean, it's 30 years since I last looked at Tongaat Hewlett. 20 years, sorry. But if you've got an option, if you can play Zimbabwe via a South African company which has a little bit of an angle there, like Implats and Zimplats, etc., then that's an amazing opportunity. So that's how you want to do it, because that deals with your risk management. Okay, because if it falls over, well, it's a small piece of Tongaat, but if it comes right, it can move the needle.
B. Chris and Jean-Pierre, is that a good call?
Yes.
Another name in the hat, and that is PPC. And between those, I think one has a choice regarding your Zimbabwe exposure, but my preference would be Zimplats, Alec.
Yes.
Jean-Pierre Verster, thank you. Chris?
If I can just show my age, and we're talking about Pick and Pay, and we tend to forget after Mr. Brash's tenure that Pick and Pay really became fraught for a period. It went to sleep and became incredibly complacent. And no one confirmed that greater than Whitey Basson. I was once fortunate enough to have a lunch with Whitey, which went on till 4 o'clock. And we each had far too much to drink. And he told me Shoprite would never have achieved what it did achieve without Pick and Pay going to sleep. And that did happen. And when Richard came in, there were some easy wins. You know, their staff productivity, there was a lot of stuff. They were really behind the curve. But anyway, that's just me showing my age.
But have they caught up now?
Jean-Pierre would probably be better placed to say. I wasn't even on the Pick n Pay call. I certainly think ShopRite's ahead of them now with the way they're carrying on, but maybe Jean-Pierre could...
I think they've definitely narrowed the gap. I don't know if Pick n Pay is quite still at the level of ShopRite. There are different ways to measure that in terms of the different ratios of expenses or revenue growth. In this period, the like-for-like revenue growth of Pick n Pay was above ShopRite over the same period. So if not quite caught up, definitely narrowed the gap.
Alec, if I could just...
You're listening to the BizNews Power Hour, brought to you by the team at biznews.com. Well, before we introduce Kevin Lings, Sean, was that your last comment?
I just wanted to make one point. You mentioned that book, Good to Great, which is an excellent book, and I haven't read it for many years, but I do remember one thing, which is that very successful businesses promote internally. And if you look at something like Apple and Amazon, you know, they've all promoted internally. And only it works well to promote from externally if the business is struggling. And so that's the only thing I would say. And you come back to the culture that Zach mentioned. You know, if things are going right at Pick n Pay, why did they need to bring in somebody from the external side?
Well, exactly. But now they've brought in someone again from the external side. So, Chris Logan, how do you respond to that? If surely one of Richard Brash's greatest achievements would have been to hand over the reins to somebody from internally. It's a good succession planning.
You know, apparently to get a top rate CEO who can run a company of the complexity of Pick n Pay, the guy's got to be highly astute and almost gifted. And, you know, we just don't have that much talent in SA anymore. It's a sad thing, you know. So I think, you know, certainly when they hired Richard, they were almost forced to go offshore. You know, you don't get great CEOs who can turn around a business. There's not many of them.
Well, it'll be interesting to see how things go from here for Pick n Pay. But as you heard from our experts tonight, it's a much happier head office, which is in Claremont. Is that right? Justin, you from Cape Town?
I think so. I think you're correct, Alec.
Chris, you would know better. Is it still there in
Yes.
Claremont? Yeah.
It's actually, you should know, Alec, it's by the race course.
Of course, near Kenilworth, yeah. Thank you very much for giving up another one of my dark hidden secrets. Kevin Lings is now looking at me with different eyes. He's saying, no, come on. Anybody who plays in an industry where they take 25% tax when you put on a pick six has got to have their heads red. But anyway, Kevin, let's talk about something a little different now, and that's inflation. It'd be very interesting as well, now that we've been doing so much investigation into the food sector, to pick up on food inflation too. But the headline number today, it looks real good at just over 3%. But reading your analysis, you expect that it's going to head towards 5% over the next few months. Why so?
Evening, Alec. There's some base effects, I guess, at work, because last year, in essence, the oil price had come down quite substantially, and when you look a year later, the oil price is considerably higher. So I guess that's one of the factors. But remember that we've got an electricity price hike that's still got to impact the consumer. That'll come through typically around about July. Some municipalities take a bit longer, pass it on in August. If you're a direct customer of Eskom, you've already seen that sort of electricity price increase. So I think there'll be some pressure from that perspective. And then obviously most recently, you'll remember the petrol price went up by R1 a litre. That's still not in the number at all. So I think there are a couple of those sorts of areas that will push inflation up in the short term, take it to around about 5%. That doesn't mean that we have an unfolding inflation problem in South Africa. It's just suggesting that we've seen the best of the inflation number. The Reserve Bank, I think, responded to that. They cut interest rates fairly substantially last year, but from here, it'll start to move in the other direction. And then I think it'll settle down at around the 4.5%, which on balance is actually a good outcome. Midpoint of the inflation target, it would suggest that the governor of the Reserve Bank's done his job and that we could enter a phase of more steady interest rates, steady inflation. So I think we just got to be aware that there are some factors that will push inflation up in the short term.
Kevin, I love the way that you unpack things, and I'm going to give you a challenge now, and then to hear what Sean and Chris think as well. In the United States, they have been creating money at a rate of 3 times of the supposedly one-off reflation they were going to do after the global financial crisis. For lay people to look at this and to say normal, first-year economics, which is about as far as I got, supply and demand tells you that if there is lots of supply and same demand, then your price is going to fall. Now, if you consider that in an American situation, how is inflation still under control in the US, for starters? And secondly, what would that mean for the US dollar? Or is it, because it's the world's reserve currency, just going to shrug this off?
So it's actually a difficult thing to answer emphatically, because you're right, it should, in terms of any of the economic models or anything you would have been taught at any year of study, once you increase the supply of the currency, certainly as dramatically as the US has done that, you should see the value of that currency weaken, both the internal and external value of the currency. And so you should see the dollar weakening, and you should have seen domestic inflation within the US become quite problematic. And that would be made even worse by the fact that you are increasing the amount of money directly to the consumer. In other words, you literally are sending the consumer a check. They can take that check, cash it, and go shopping, and that's exactly what the consumer has done. So this should be an environment in which inflation takes hold. There are a couple of things that I think have argued against that. The one is incredibly difficult to explain clearly, and that is the psychology of the dollar. The US has increased the number of dollars in circulation by a phenomenal amount over a long period of time, and yet the dollar remains relatively strong. And if you try to do that, say, with the South African rand, I've got no doubt that the rand would weaken dramatically, because you would be flooding the market with rands. And the truth is, not that many people would want the rands, and so the value would fall. In the case of the US dollar, people love the dollar. You can offer as many dollars, you can increase it as much as you want, and yet people still demand the dollar. And you can do the test for yourself. Say to yourself, if somebody walked into my house and offered me equal value in a range of currencies, pick any currencies you want, whether it's got to do with the Japanese yen or the euro or the dollar or the Aussie dollar, pick any currency and say to yourself, honestly, which currency would you pick up if you had free choice? And the vast majority of people in the world would choose the dollar, even though the US is printing a hell of a lot more dollars. And that provides the US with a phenomenal strength, a phenomenal power base. And they are using the strength of the dollar to their benefit. They know that they can increase the supply of the dollar and people will still want the dollar. And so they can get away with it. And it results in the currency remaining strong and therefore not any sort of imported inflation. Domestically, I guess it's got to do with the competitiveness in the system. That helps enormously. The fact that people's salaries are not going up dramatically, that to some extent has helped. But it remains somewhat of an anomaly. And I guess in time they may still have some inflation, but for the moment, yep, they're getting away with it. Phenomenal exercise if you can get it right.
Sean, that is so interesting, isn't it? There you've got a country that is doing everything that they would tell us we would be doing wrong. If South Africa was creating lots of money like that, and yet, as Kevin's just unpacked for us, the dollar remains the world's reserve currency.
Absolutely, Alec. Look, I think you are seeing inflation, but you're seeing inflation in asset prices. And, you're seeing inflation in, soya prices up 50%, and just reading some of the conference calls, Pepsi and Coke and Procter & Gamble and all these companies are talking about inflation in their input costs. But if you think about it, what's been happening is people have been getting these checks. They haven't been able to go to restaurants. They haven't had to spend money on traveling and commuting into town. They've been a little bit worried about their job situation, so they've been saving it. And so they haven't been, if they were all spending it wildly, well, then we probably have a lot more inflation, but they've been saving it. And where have they been saving it? In equities, because you get nothing in the bonds, and boom, you've got the equities. So you've had inflation, it's just an equity. And houses.
Yeah, they're buying houses in America like it's going out of fashion.
Well, and interestingly, I actually think some of the home builders are very interesting. Okay. And you can buy these companies on 9 times earnings, and they've been underbuilding homes for decades in America. But what's interesting is people are now saying that my home is not just the place I live, it's my office, it's my gym. And if I don't have to, I live in Woking, if I go into London just to Waterloo, it's £20 on the train. Now, that's without commuting into the middle of London. So let's just say, if I'm no longer have to do that, and that's 20 days, that's £400 I'm saving. If I'm throwing that at a mortgage, that's another good few tens of thousands of, a couple of 100,000 probably in terms of your mortgage repayment. So you can buy a bigger house further out. You're not having to spend on commuting. It's your home, your gym, etc. And so that's what people are doing. They're saving for their houses. They're spending, and so I think that's where we're seeing inflation. And things like lumber prices are up a lot.
Chris Logan, are you looking at the home builders in the United States, and dare we suggest it, the construction companies here in South Africa? I see Wilson Bailey, I know it's in our business share portfolio. That's had quite a nice little run of late. It was 80 Rand not long ago. It's now at 110.
Sure. Look, what I do know, all the companies connected to home improvement have had a huge run in South Africa. What Sean says, though, it's got me thinking. So those are interesting thoughts from Sean. And, it certainly makes sense from what he said to be looking at the home builders. But,
and Kevin,
all these things require an immense amount of research, and there's only so much time in a day.
Lots of ideas, not always the time to be able to be confidently following them. Kevin, if you could give our listeners a insight into what they can confidently follow on sectors, given that we now got much more clarity on what's going on with COVID, would there still be here in South Africa a scope for home improvements to continue to boom in the way that it has? We've seen the Telltale's price, for instance, and then to go into construction, which is the big story supposedly for the way that South Africa is going to recover.
So I think that I can understand the improvement in the building component of retail sales, the hardware sales. I think it's actually been global, that there's been a huge amount of money going into home improvements. We've also actually seen furniture sales, appliance sales being very robust. So there's no doubt that people spent time and money revitalizing their home. But I do think we're getting to the tail end of that. If I look at the most recent numbers, that momentum seems to be topping out. And it suggests to me that in order to get encouraged by that sector, you need to see more fundamental growth. You need to see more employment, more building of houses, all of the sorts of things that you would want to happen in an economy. You would need more evidence that that's happening. So to some extent, this was artificially driven. It was COVID-19 related, and I don't think it necessarily is sustainable at quite the same growth rate. In terms of, though, the investment side, I must say there are a couple of things that look a lot more encouraging. The noises that Our engagements with government suggest they're much more interested in private-public partnerships. If I look at our ability to allocate money into infrastructure projects, that's gone up significantly. And I do think that over a period of time, we are going to see more infrastructure coming through in conjunction with the private sector. And therefore, I would be more encouraged by the construction sector in South Africa, and perhaps feeding off that a little bit of employment and a little bit of home improvement. But I'd have to caveat with saying that's not the here and now. That's a kind of 3-year story. It's not as if it's suddenly going to materialize, and it's all going to take longer than you think. But I think there's something there to be mindful of. And I wouldn't be surprised if construction companies are reflecting some of that positive that's starting to emanate from discussions with government.
Leading indicators. That's Kevin Lings. He's the chief economist at Stanlib. Also in the program this evening, you heard Jean-Pierre Verster, chief executive of Protea Capital Management, Chris Logan, the CEO of Opportune Investments, and our guest market commentator tonight, co-host tonight, rather, Sean Pesh from Ranmore Fund Management. Before we go, BrightRock believes that with every change in life comes opportunity, and the markets aren't any different. The daily movements in the markets mean change for us all, sometimes small, sometimes big. This daily market report is made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes.
The JSE All Share Index was slightly in the green at 67,100. The highlights included Sasol increasing 8 Rand to 233 Rand a share on the back of stronger oil prices. Implats surged 5% to 293 Rand as precious metals producers were up across the board. Naspers and Prosus were both down on the day to 3,400 Rand and 1,560 Rand a share respectively, as Tencent fell 2.2% in Hong Kong this morning. In the US, earnings season is well underway, with Netflix reporting after the bell yesterday. The share is down over 7% after the company predicted its worst quarter for streaming growth in its history, with the reopening trade continuing to gather momentum. In the currency markets, the rand was flat against all the major currencies to 14 Rand 23 cents to the dollar, 19 Rand 83 cents to the sterling, and 17 Rand 12 cents to the euro. Gold is up at $1,791 an ounce. Brent crude is trading at $66 a barrel, and the premier cryptocurrency will put you back 800K a Bitcoin.
And this market report was made just for you by BrightRock, the first ever needs-matched life insurance that changes as your life changes. Thanks for being with us tonight. We'll be back at 5:30 again, same time, same place tomorrow. Until then, from the team at BizNews, cheerio. You've been listening to the Power Hour, brought to you by the team at BizNews. Guys, that was fantastic. That was really, really, really nice. Thank you. Thanks, Sean. I think you did a terrific job. And Chris, great insights. And Kevin, man, hey, it's good talking with you. And thanks for making it all sound understandable. Hey, Justin.
Yeah, thanks so much, guys. Really appreciate it.
Good. We look forward to seeing you. Sorry, Chris?
Great. I'll ask you to WhatsApp me Sean's contact details, just like you did David's yesterday.
Of course.
Chris, you're using us for a sort of a networking gig here.
There we go. Yeah.
First Shapiro and now Pesh.
Well, I think that's fair. You did have to.
He's a far more interesting guy to talk to than me.
A dating service. I know he's a good-looking guy, Chris, but wow. No, there's Tinder.
No,
Good. Thanks again.
Cheers,
all
guys.
right, guys.
Very good.
Thank you.
Cheers.
Thanks very much.
Okay.
Cheers.
Sure.
Bye.
Bye. Bye-bye.
Okay. Another one done.
Well done.